Hello, I'm Chris Way, Executive Vice President and Chief Client and Innovation Officer for Sun Life. I'm also a member of the IIS Executive Council. I'm pleased to bring you the next session, which focuses on supply chain, a topic that has bubbled to the surface as a result of the market disruptions brought about by the pandemic. We have a great panel of executives representing some of the leading organizations in our industry, led by Swiss Re's CEO of Corporate Solutions, Andreas Berger. Andreas, over to you.
Hello and welcome to this panel session. I'm Andreas Berger, CEO of Swiss Re Corporate Solutions and Chairman of the Executive Council of the International Insurance Society. I'm very delighted to be presenting this panel as part of this year's Global Insurance Forum, The Great Reset. And I'm also looking forward to getting into the debate about the supply chain crisis and if this is fueling a retreat from globalization. I'm sure you all agree this is extremely topical, especially as supply chain disruption is a C-level concern. Now, with me today on the panel, we have John Neal, Chief Executive Officer of Lloyd's, a position he's held since October 2018. And obviously, John everybody knows you, brings a wealth of knowledge to the panel, having held positions not only as a CEO, but also Chief Underwriting Officer, Chief Operations Officer, since starting his career as an underwriter. And so welcome, John, to you. And also on the panel, we have Matthew Dolan. Matt is President North America Specialty and Ironshore, and Executive Vice President Global Risk Solutions with Liberty Mutual Insurance. Again, very experienced, brings 30 years of experience in the specialty insurance arena. And I'm very much looking forward to your insights too. So a warm welcome to you too, Matt. So let me just quickly introduce the topic today of supply chain disruption. And then we can go into a dialogue here to see what we do with it. Global supply chains are facing the worst disruption in 50 years, largely due to three factors. Number one is the pandemic. Number two, now very topical, the war in Ukraine. And number three, climate change. Losses from floods have been on the upward trend globally, and according to the latest Swiss Re Institute figures published in August this year, floods and storms drove global insured catastrophe losses up to 38 billion in the first half of 2022. Now, just to put this into context, it is 22% above the average of the past 10 years. Additional stress on supply chains has come from the bounce back in consumer demand as a result of government stimulus packages, as we all saw. And some industry experts expect it will well be at least another 12 to 18 months of low growth, high prices, and bare shelves before the disruption ends. However, with the war showing no sign of a peaceful end, as we all hope for. Further lockdowns in China is an issue, unresolved and heightened concerns between China and the US over Taiwan as well, and increased and more severe weather events. I think that outlook is somewhat optimistic. However, since the supply chain crisis started to hit news channels, many companies have made structural changes to their supply network. Dual sourcing strategies have come to the fore to help reduce disruptions, but also in addition, many companies have increased buffer and safety stocks. In fact, I think McKinsey report said on supply chain resilience, it stated that on average, across 300 listed companies, inventories had increased by 11% between 2018 and 2021. However, despite the progress many CEOs and their boards and executive committees made, and the corporate risk and insurance professionals also are part of this discussion, I have spoken to them and they say they still lack a comprehensive view on the risks hidden within complex global supply chains that comprise multi-tier suppliers. So they want to take back control of supply chain. That's what they always say, and that's the line that we hear from all of them. And one of the responses, however, to the continued disruption is the push for bringing manufacturing back from overseas to reduce disruption, delays, and also increase production and transportation costs. So shorter supply chains and friendlier conditions should allow firms more security, transparency, and also control over their supply chains. Now, in reshoring, nearshoring, and now friendshoring are somewhat buzzwords. We have to get a grip around it. And it's a topic that we saw accelerate during the pandemic as the need for supply chain resilience picked up pace. Just in the recent Swiss Re Sigma publication, Maintaining Resilience as New World Order Takes Shape, it reports that many advanced countries have been discussing reshoring and friendshoring, part of overseas production activities back home, and raising local procurement rates. It also finds that in a simulation exercise, despite reducing world trade flows, reshoring would boost annual global GDP by 0.2% over 5 years, with US, UK, and Germany benefiting most. And export substitution countries with higher external trade dependencies, such as Mexico typically is mentioned, and Vietnam, they lose most in a reshoring scenario. But conversely, they would gain most from friendshoring activity. So reshoring activity would also generate 30 billion in global commercial insurance premiums over the 5 years, mostly from lines of business like engineering, property, and also liability covers. Marine and trade credit premiums would fall, and friendshoring would generate $3 billion in premium, extra premium. Against this backdrop, it is extremely topical that we are discussing this topic of supply chain crisis in this panel today and debating whether this is fueling a retreat from globalization. Now, to get started, let's start with the first question. Supply chain disruption is top of mind for businesses as a result. Are we seeing the death of globalization or a shift rather than an end? So maybe, John, why don't you come in first, and then, Matt, you might then add to John's response to this question.
Andreas, thank you very much, and hello, everybody. And I'm not sure I can match you for statistics, but I think there's little doubt that we're seeing a long-term trend of reshoring and simplification of supply chains, and there's lots of different reasons for that. I think in the US, we saw Trump's America First agenda. We've seen the UK depart the EU. We see quite a lot of hesitancy around reliance on China as a trade partner. And then we've seen the impact, as you've hinted at, around the pandemic and the introduction of protectionist policies to minimize exposures. And I think then you add in the conflict in the Ukraine. So an awful lot of pressure at the moment on the supply chain. I think the proclamations that globalization is over feel a little premature to me. Our world is just simply too interconnected for there to be any meaningful separation. So when we talk about the issues arising from the Ukraine or coronavirus or climate change, I think if anything that underlines just how deep these connections go. So rather than this being globalization is good or bad or dead or alive, it's about individual economies doing what they think they need to do in order to protect themselves.
Yeah, no, great. And Matt, maybe you want to come in as well.
Yeah, thank you, Andreas, and it's nice to be here. I think what we're experiencing is the proverbial pendulum shift, right? In the face of very extreme circumstances that John articulated and Andreas that you articulated, there always is this instinct to overreact and suggest sort of a binary alternative. It's either globalization or total onshoring, and we're seeing these dynamics, I think, amplified by this emerging sense of nationalism. So there is a convenient and I think amplifying political dynamic that makes the appeal of onshoring, redomesticating production and manufacturing more appealing. So I think it has that rhetorical appeal to people, but I don't think it spells the end of globalization. I think, like many things, we will find the right balance between the two, right? The right balance that enables efficient manufacturing, cost-efficient labor, as well as the ability to solidify and diversify the supply chain, so we are not as vulnerable in these type of situations as this event has proven us to potentially be.
Yeah. I mean, there's clearly we were talking about local content for a couple of years now, and there's clearly an increase in overall mandatory environmental reporting also with TCFD, the Task Force on Climate-Related Financial Disclosures, EU taxonomy, and to clarify also investments, whether they are environmentally sustainable. Now, how do you see the evolving legal and regulatory focus on environmental and social standards impacting businesses' decisions around where supply chains can be sourced?
Yeah, it's a big one, isn't it? I mean, I think ethical considerations around supply chains are much more front and center than they ever were. You've got everyone focused on the conversation, whether it's the investors, banks, governments, consumers, even us, dare I say it, as insurers. And I think it puts businesses under quite a lot of pressure as they try and navigate the trade-offs. You know, what does it mean for lower production cost versus the potential reputational damage of doing business with an unsavory trading partner? And part of the challenge, when I think about it, is the sort of fluid definition of what's acceptable, you know, which means potentially countries of origin. So if we take something, and I'm not trying to be controversial, take Middle East nations, they move in and out of favor depending upon the political priorities, public sentiment, and all sorts of investor behavior. So I think it's getting really, really difficult. I mean, again, think topically of the Russian invasion of the Ukraine, and that's created tension around the appetite for ESG and what's right and wrong. So I think it's really, really difficult for businesses who are facing intense pressure to have to make some critical decisions, sometimes on the hoof.
Yeah. I think it's such an important point, and it's such a fluid dynamic, right? And what we think about in the ESG environment and the increased regulatory environment and the scrutiny is understanding the path or the journey that organizations are on, that they're demonstrating the right kind of intent, the right kind of controls, that they're evolving their business models to be directionally in compliance with the ESG framework. But it's not a flip of a switch. These things take time, and as John alluded to, there are a lot of moving parts. There are economic issues worldwide, right? There are social issues worldwide, energy issues, right? Worldwide that make, you know, immediate and maybe, to be a little bit controversial, idealistic compliance just simply impractical. So what we look for and what we talk a lot about our insureds is, what is their framework? How do they think about it? What is their visibility into their suppliers and into their vendors? And do they have a map of a terrain that they will essentially follow and navigate through all this complexity to ultimately, and the operative word is ultimately, arrive in the right place?
Yeah, no, it's actually interesting. Also, my conversations with corporates and C-suites, it's exactly reflecting the same points that you made. I mean, we see CEOs making commitments, pledges, at WEF or COP26. And then back home, the teams, the companies are confronted with the complexity, lack of standards, unclarity around what needs to be disclosed, what not. And that's a journey. It's a journey. I think the train has left the station, so teams are working on it, and we're obviously confronted with this. And this brings me obviously to the next question around the resilience of the supply chain in businesses. So because around the world, businesses are prioritizing or reprioritizing the resilience of their supply chains. Mainly also in answering the immediate disruption that they face. It's very operational sometimes. And how's the insurance industry reacting to this? So I should say, Matt, how's Lloyd's and how is Liberty Mutual also reacting to this? How can you support customers to improve supply chain resilience?
Yeah, do you want me to?
John, yeah.
Go again, Matt. I mean, you sort of hit the nail on the head, Andres. I mean, I know it'll be true across a number of insurers. We certainly provide cover for supply chain disruption, and it's a well-established product actually across the insurance industry. But there are real limitations when you get down to second-tier or third-tier suppliers, because there's so little data is held by businesses on second or third-layer suppliers. So the stupid example I always give is, who provides the ink in the pens that you source from China? it gets into that level of detail, making it almost impossible to assess the risk and then arguably price the risk. I think we're getting better at the way in which we do things. For example, some of the insurtechs that I know Matt would work with as much as we do are trying to find sort of smart technology that would monitor sort of cargo tracking for transportation reasons. But it's difficult. It's difficult when you go down a level or two levels into the supply chain. No doubt about it.
Yeah, Andreas, and we talk about a few high level things and that we look for to try to help insureds navigate through the complexity of this supply line issue. One of them, importantly, is the enhancement of inventory management, right? Identifying those critical components, building the kind of strategic reserves to build a production buffer that can withstand some supply shocks or disruption. There are technology enablers, right? There's ERP systems and radio frequency identification mechanisms that provide a level of transparency through that supply chain. And we look to understand that and suggest how that can be effective. Those can be effective mechanisms in dealing with the supply chain. We talk about reducing reliance on just-in-time principles, and just-in-time inventory has been a big driver, right? And I think a huge benefit of effective globalization and supply side management, but we see now the other side of it. So some reduction in the reliance on just-in-time principles we think is important. And then exploring the idea of direct fulfillment, right? And that reduces the reliance on external vendors, and that allows one to fulfill internally. So those are, we think, three critical high-level principles or business strategies that can be invoked. And then, of course, I would be remiss if I didn't tell people to think very, very carefully about their insurance program and how responsive is it to these emerging issues, and how thorough an understanding does the insurer have about how the insured is looking to navigate through these complexities. Like many things, Andreas, it's often the transition where the risk emanates from. It's not the destination when they figure it out. It's how they begin to pivot or navigate towards this new normal or new reality where we start to see new and emergent risk. And it's really important that we just be aware of that and help insureds to navigate through it.
Yeah, I mean, the experience I made with the discussions we had with the corporates is that there's some basic challenges. Transparency, get the data right, because the reality is data is disorganized, is dispersed in organizations, and there are many people trying to address this. You see software companies, SAP, I mean, you were talking about ERP, the Microsofts of the world, they all try to crack the code. But the reality is a lot of people just go to level tier 1 or maybe tier 2, and then tier 3, it's getting very fuzzy. And the interdependencies are not really caught, and that's why we will still have surprises, negative surprises. Businesses will be stressed because of that. So my question is really, how can businesses better partner with insurance companies, but also, maybe what role do the brokers play here to mitigate this kind of risks, to get data organized also?
You want me to try to take that first, or
yeah,
you want?
Why don't you go, Matt? Yeah, why don't you go first?
I think Andreas, the role of the insurer, the role of the broker, like anything in environments of emergent risk, of increased complexity, speed of change, is this idea that we need. And I think the role of the broker is to help the insureds tell their story about how they're navigating it. I think that they need to be able to represent how an insured has navigated through prior periods of complexity, that they have a track record of forward thinking, of adaptability, of a certain level of agility, importantly, real awareness. What we'll listen for as underwriters is, are they acutely aware of the challenges, and do they have a pretty cogent story about how they're going to deal with it? And can they point to other times in their past where they have effectively navigated these or kinds of analogous challenges? That's really important. So I think the broker's role is to help the insured tell the story. The insured's role is leaning in and listening, and conveying examples where other insureds have had success in navigating through similar types of situations. I think that's the great value that the insurance community can provide, is presenting useful, relevant analogs to insureds that they've seen across their portfolio that are representative of best practices. And then obviously risk management and risk engineering and all the other things that provide useful content to facilitate these types of navigational challenges are really important.
Yeah, and John, you were referring to insurtechs also. How will data and technology or digitalization play a role in this need for increased resilience and transparency on data, or organization of data also?
Yeah, I think two thoughts. I think Matt's covered it really well. And to answer where you ended up with, Andreas, I mean, I think data's becoming much more real time. And, traditionally insurance and business has thought about points in time when data should be presented, at inception, at renewal. I think we've got to be much more real time about the way in which data is presented and the risk can be monitored. And I think that's better for the customer, and it's better for the supply chain issues we're talking about. I think we should also be brave and drop into do some work, share the information around particular industries that have faced unique challenges. So dare I say it, think of the food and beverage industry and think what they've been through as a result of the pandemic. So I think we should dive in, particularly around supply chain, and say, let's pick some industry that's had a particular set of challenges. What were they? Were those challenges well protected, either by banks financially or by insurers, yes or no? And the answer is they weren't. We know they weren't. So what could we and should we do differently? So I think there's a few areas we can jointly sit down and just work through and come up with some better solutions.
I'd love to add on to what John said, because I think it's particularly important, and this the topic is the Great Reset, and I think that's really relevant. This idea that we underwrite sort of in batch once a year, right, as opposed to a continuous evaluation of the insured's progression or the emergent risk that the insureds are navigating through. I think we need to change that paradigm. I think we need to be looking at and underwriting in more of a continuous and perpetual way, because I think we need as an industry to figure out how to underwrite at the pace of change. And certainly the pace of change doesn't comport with annual renewals. I think that's really critical. And I think technology and having insight into critical data points is a fundamental enabler of that. I think the other great challenge, and it is somewhat related to the prior comments, is given the pace, breadth, and depth of change and complexity and things coming together in unprecedented ways, compounding risk, our models are less predictive, right? We're sort of an industry that is inductive by nature. We look to the past to predict the future, but we're seeing things come together in unprecedented ways. As such, some of the direction that the models can provide are more limited than they have been in the past. So I think a big part of this reset is an underwriting posture that recognizes that models are an important data point. They are far from dispositive, and we really need a contemporary view and understanding of risk. And we need to be really good. And John made this point about analogs, right? Well, where can we look across our portfolio and see analogous situations that help inform this emerging view of risk? I think that's exceptionally important for us.
Yeah, no, I think that those points are absolutely valid. I mean,
I think Andreas, just thinking, it's worth picking up. I mean, Matt's gone in a really good direction, because we talk about technology a lot, don't we? And technology is part of the solution, but it also creates risk. So as we've all adopted more technology, it's created risks. You know, when we look at the pandemic, we got much increased use of the internet. I think global internet usage was up 10%. You know, when we think about the increase alone in cyber attacks, 15% in 2021. So technology bizarrely creates risk. At the same time, it can also provide the solution. So you were talking about insurtechs, and we were chatting about those. We were working with one which has been providing parametric cover for cloud outages using a smart monitoring and notification system. So the interesting thing with technology is it sits on both ends of the equation. It creates the risk, but it can also be the solution.
It's one more point on that, Andreas, right? Progress is not monotonic, right? Along the way, new things present and emerge. And certainly this idea and technology is part of the answer. It is without a doubt, increasing transparency, speed, conveyance of information, pattern identification, right? Some of the algorithmic mechanisms that we're seeing that are very effective in helping quantify risk, but increased dependence on technology, as John said, so effectively, obviously creates its own kinds of exposure around cyber and our dependence on technology. So every solution, right, every step in the right direction presents its own set of challenges along the way.
Yeah, John, I like your thought also to sit down together as an industry, because if you look at the data that we collected in order to model historically, it's probably not answering the challenges or the questions that we have today. And we almost have to forward integrate into the customer's world, because the data we got through all the questionnaires historically are not fit for purpose. I think your more real-time type of information is absolutely key to get this information. I mean, look at values, property values, for instance, also in the context of inflation. This is absolutely critical that we gather the data from the data source straight away, rather than, you know, being sent through various channels with all the breakdown in communication in between, and then everything's outdated. So I think that's worth the effort in my view, because then suddenly a very complicated risk or even new risks are becoming much more insurable, and we have much more solid modeling then around it. So that's probably an effort to be made. And again, the brokers can facilitate here. You said the brokers are listening to the customers and helping them to bring their risk into the industry. I think that's something to really think about as a stakeholder group, basically. Yeah,
I think that's exceptionally important, Andreas. I think that data, in to the degree that it evolves into information that ultimately informs judgment, right? That's sort of the virtuous circle that we want to see with data. But we can't, data without judgment, data uninformed by judgment and experience won't provide us the kinds of answers that I think are perfectly or optimally probably better put to today's kind of emergent risk situation.
Yeah, and just it's an interesting conversation, but do you see also other factors other than supply chain disruption that are fueling a retreat from the globalization that we observe here? Is that something, or the slowdown of globalization? Is there something you see, or do we just simply go back to pre-COVID times?
I just think I think recession. And let's remind ourselves, every period of significant inflation we've seen in the last 20 years has been followed by recession. So I think we'd be unwise to fail to estimate the recession is coming our way. But whenever you see recession or tougher times, that sees a retreat. It's not necessarily from globalization. It's as much belt tightening. It's cyclical rather than a trend in my view. I'm less anxious about that than you would naturally think you should be. But I think that said, pressures like inflation will make, and do seem to make, businesses simplify their supply chains. So you see reduced travel, or you see the choice around cheaper, or potentially, dare I say it, less ethical options. So I think it does create a point of pressure that just makes businesses and consumers just think differently. But as I said, I think it's cyclical. I'm not sure it's a trend.
I agree. I think it is cyclical as well. And while we certainly learned a lot from the COVID events and the war in Ukraine about some of the vulnerabilities of supply chain and some of the challenges attached to globalization, I don't think we can sit here and declare it as an effective repudiation of the model. Globalization has worked, has provided tremendous benefits, has expanded the growth rate of economies across the world. So I don't think we will unwind that. I think we will learn lessons and carry forward and understand these vulnerabilities and fortify those accordingly. And so I think we will continue to function in a global, intricately interconnected type of environment. I think John's point about inflation is a really important one. And the way we think about the combination, and we have a view that compounders are where the real risks are. So you talk about supply side, you talk about labor shortage, you talk about inflation. Those are all very dangerous compounders. You layer in disruptive weather events, hotter, wetter, stronger, more severe. Though that's an awesome compounding of elements and issues that really serve to drive risk. And I do think it is a system under stress, globally, locally. And I think, to John's point, that in times of stress, we worry about businesses taking shortcuts, businesses oversimplifying, businesses making decisions under duress, and that creates real risk. So inflation is definitely a major pressure point that is amplifying an already pretty robust, rich risk environment.
Yeah. Well, what I heard was, obviously supply chain is a big topic. I think it really comes down to get the transparency around, what supply chain really means and what the exposure side really means. And I also heard, that it's worthwhile making an extra effort, because there's a high urgency here, because we have a lot of companies that are really fighting for, existence. It's existential for some companies. I've spoken to some of the suppliers, to the OEMs, for instance. Increases in costs, is almost unbearable, and it's very difficult to pass it on to the customer, in particular when you are a supplier. So that's something they really want to tackle. And then also we realize that the need for capacity in very difficult areas like product recall, it always comes down to the same topic: the transparency around data and the supply chain, because that triggers actually a lot of the product recall cases that we had. So if you had this one big wish, to happen in our industry to tackle the supply chain crisis, what would it be? I know it's not year end yet or Christmas yet, but this one wish, maybe to both of you, John and Matt, what would that be?
Shall I have a crack, Matt? So it's quite interesting. I was with my leadership team a little while ago, and I put up on one slide the last 200 years of history, and said, here's 200 years of history behind me. Insurance has mattered 3 times, really mattered 3 times in the last 200 years. Between the 1850 and 1870, you've got civil wars going on all over the world. You've got World War I, World War II, and you've got this particular period of time. And we've talked about it, haven't we? We've talked about financial pressures and inflation. We've talked about systemic risks manifesting COVID. We've talked about climate. We talked about the interconnectedness of the world and the geopolitical implications. and I know, Andres, you'll feel the same, and I know Matt will feel the same. Our job as insurers is to actually give businesses, government, society, the confidence to make the decisions they need to make in the face of economic and financial challenge. And I actually genuinely feel this is one of those times in history where as insurers, we've got to stand up.
Yep.
We've got to listen to our customers, understand the pressures they feel under. We're actually all in good shape. You know, our balance sheets are in great shape. So we have the ability to take risk. So if there's one wish, I think that would be the wish. Can we provide the right products and services that give businesses the confidence they need to make the decisions and address the challenges they're facing at the moment?
Yeah, I like it. Insurance matters, as you said. Matt.
Yeah, I really like that. Yeah, I guess the Christmas wish would be for me is that a reckoning, a recognition, and a lot of this goes to John's point about the relevance, the fundamental utility of the right kind of risk transfer solutions. Importantly, I think what the industry needs to understand is that risk does not present in inconvenient product silos the way it used to be. So we really need to think more holistically about risk in terms of solutions rather than products. And that requires a very, very deep contemporary understanding of where risk is, how it's presenting, where it's emerging, how it can present. And the ability to respond to it, right? There's that saying that if your only tool is a hammer, every problem looks like a nail. We're not in a hammer and nail risk environment. It is entirely much significantly more complex. So we have to think in terms of broad, comprehensive solutions responsive to emergent risk. That means understanding what insureds are managing through, listening, being creative and innovative, to John's point, having courage and conviction. That way we can facilitate, we can underwrite their ability to ultimately navigate through this period of tremendous complexity. And I think in 30 plus years of underwriting, this is as complex an underwriting and risk environment that I've ever seen. I don't know if John agrees with that, but I think that's tremendously exciting. And the key is for us to be risk aware and not risk adverse.
Yeah, no, I fully agree. I mean, to partner is my wish. The partnering element is so important. And I think we have to rethink the way we partner with insurers and brokers. And that's probably, the key also to make us even more relevant in difficult times like now. And it always reminds me of our purpose, to make the world more resilient. That's what we say here. So on the insurance and reinsurance side, we are important to the economy. So, with that word and a bit of optimism also, there are also parts of the world that are actually not too bad. So, I just came back from Asia and Southeast Asia also, and you still see pretty healthy GDP growth in Southeast Asia. There might be winners or losers. We don't know exactly on the supply chain reorganization. But that's an area where, for instance, you can definitely see still some growth also. But growth is not the problem. We've seen the numbers before that are quoted. All these situations here create opportunities to make the insurance premium pie even bigger. And that's an opportunity here. Should be attractive to people, but let's be sure that we have a technical approach to it. Otherwise, we end up again, in shambles, like we have seen the situation before. So with that, I'd like to also thank John, you and Matt for your contributions and for sharing your insights on this panel today. Thank you, gentlemen. And I hope that this was interesting for the audience. You have enjoyed the panel, hopefully. And I hope it was informative, this discussion. And again, I wish you an enjoyable time at the rest of the conference. And thank you and goodbye for now. Thanks.
Thank you.
Thanks, Andreas.
Wow, what a great panel discussion. As Andreas mentioned, this has been the worst disruption to supply chain in about 50 years. Just the highlights, of course, you've got the global pandemic still not done. You've got a Russian-Ukraine war. You've got climate change that is affecting global supply chains. And that led to sort of a big question, given all the globalization that has happened, is there a retreat from that concept? The panel discussed, clearly there is some reshoring going on. And I think really companies trying to simplify their supply chains. There has been some hesitancy with China, which started with the evolving US-China geopolitics since the Trump presidency. But I think the conclusion was globalization is not over. The links run deep. However, we are seeing some individual economies just simply doing what they need to do to protect themselves. Now, what adds an extra layer of complexity, of course, ESG, human rights and ethics is now an additional layer of complexity. And all stakeholders are applying this lens in choosing partners, governments, regulators, corporates, of course. And then you've got digitization, which on the one hand offers new capabilities and opportunities, leading to greater efficiency, but also new risks. And as John cited, you've got global internet use up roughly 10% over the period during the pandemic, but also new cyber risks or cyber attacks up 15% over the same period. That sounds to me like a net negative, but nonetheless, I think that's a trend that is not gonna stop. I would just highlight kind of a personal anecdote myself as I kind of read all the news from Asia, as we talk about supply chains and how that links to sustainability. Clearly, you've got countries that are experiencing some of the hottest summers on record. China was no exception. And as a result of that, you've actually had not just supply chains affected because of rivers drying up, and rivers are needed to sort of, transport goods by ship, but also you've got rivers drying up. And the effect of that is China has a shortage of now hydroelectric power, which is a major source of their energy, and they actually have to burn coal now. But the implication is that they don't have enough energy to replace what they normally take up. So you've got factories shutting down that is exacerbating supply chains. And that is going to have global implications throughout. And of course, that's just another example of how the world is affected. Now, there is some real opportunity for the insurance industry, and the panel talked about how we can provide real value in helping our clients manage supply chain disruptions. I think for the large corporates, data is there, it's not an issue. John clearly highlighted when it gets to second and third tier suppliers, that's a problem because there's a lack of data. And a great example that kind of illustrates that is if you're trying to simply help a manufacturer of pens in China ensure their supply chains, do you actually know who supplies the ink for those pens? It's a small example, but it sort of highlights the challenge of getting into the nitty-gritty of that business. And that leads to another concept, which is brokers really have a massive role to help insureds, not just manage their risk and get the appropriate coverage, but also to tell the story and really explain how companies have capabilities and know-how that they managed through other stresses and pivots before in demonstrating how they can manage risk. And that actually helps the insurance industry also extend capacity. Now, insurers can help their clients with our own experiences and best practices, whether it's risk management, risk assessment frameworks, holistic programs that can really help our clients manage their overall business. And also recognize that perhaps short-term decisions that are made currently under short-term stress and duress might actually create longer-term risks. Now, how does that translate to sort of how the industry must adapt? For me personally, this is a passion point of mine, but I think the panel really agreed that evolving data capabilities, evolving them so that we move from sort of a moment in time concept to real time. And I thought that was a great thing to discuss. Moment in time meaning you only get some data at, let's say, point of renewal or point of application or point of claim. Real time means sort of ongoing understanding as to what those risks are. And recognizing that in a world of unprecedented stresses, that standardized actuarial models or risk models have limitations. Those are based on historical data points that actually may no longer be relevant. And Andreas asked the final question, which I thought was great. If each of the panel members had a Christmas wish, what would it be? I'll let you hear yourself what they said, but essentially what I think the conclusion was for me is think holistic solutions. don't think traditional products. We have to recognize there are emerging risks, that there are new sort of systemic needs and pain points that are emerging. We need to listen to our clients. We need to be creative as an industry and actually have the courage and conviction that we can lead our clients out of this challenging time. So I hope you enjoy the panel. I certainly did. Thanks very much.